Thanks for joining us today.
Yeah, this is going to be a little bit different format. We're going to share some of that information that we sort of have like right in the middle, right up front. We just want to talk about sort of the what's happening in the market just right out of the gate. So, as always, you can follow our Facebook page. We do some updates there, so you can get some, um, information that's kind of high level. We're not going to go as deep into detail, obviously. So, everything that my part of the presentation will share is from the Cromford report, so I just wanted to give them credit. They have some good information. Let's start with the contract ratio. So um, this looks like a pretty stable ratio, doesn't it? I mean, we're in the 50s. We haven't climbed out of the 50s. We've been in the 50s since February 4th, so quite a while. It's chugging along. We think we're going to break out, but then we just don't. So the reason why this is notable is because if you look at what a normal cycle looks like in the spring, you get ramp up. You get, January, you break through and you've got a lot more going on. So we're down here at 52.9. We were at 84 last year. We're just like trying to, it's a little engine that could, but those rates are keeping us from really getting anywhere.
But if you notice the general arcing trend from January through April, it's the same shape, it's just smaller.
Hmm.
Um, it's just lower. So that's um like that means it's predictable. That means we can tell what's going. Things aren't moving as fast as they were last year, but they're moving at we're going through the same cycle. It's just downshifted a little bit.
Hmm. And what this like reduced demand though, that relationship between supply and demand, it's sort of starting to stack inventory, which normally we're starting to burn that off. So it's just not getting burned off. Um, Cromford Market Index is not scary, right? Last year was a bit of a roller coaster because it just ripped up and then it dropped down, but then it's came to a crawl right before we hit that balance line. But as you can see, we're just chugging along on the Cromford Market Index too, and this is across all areas and all prices.
Now, looking at this graph, it makes like last year looks awesome and this year looks sad, but we need to get some relative numbers in this because this year is still we're still above 110, which 100, Joe, what does 100 mean?
That's sort of balanced. So I mean, we're looking at seller favor still at the moment.
Right.
It's just kind of dwindling, not as strong. So if you're feeling pretty confident in your listings, if sellers are feeling pretty confident about their homes, they should get real and pay attention to what's happening. If you're not getting the activity or if you're not getting the offers, then well, you're looking at maybe pricing yourself out. You're going to be the highest bidder on your house. Nobody wants that. Let's take a look at the active listing, right? This is your supply. Anyone can go out there and put one of these under contract. That's one of the most consistent lines I've seen in active listings in a long time. Throughout these last 4 years, you've got some periods where we had kind of flattened. So in 2021, we didn't have any kind of crazy volatility because there just wasn't anything to buy. You had like 4,000 houses.
Right.
But these actives are currently creeping up when typically they are going down for the spring season. So, that reduced demand, that lower contract ratio means that, you have fewer under contract per active listings, and that's continuing to climb. It's got a couple of dips, but in general, it's remaining positive. Um, so a little bit sleepy, a little bit boring. Don't nod off. Things are still happening. New listings. This is kind of interesting. We've got a lot more coming on. So I did my 7% adjustment, and that looks like we'll probably have loaded between 9,300 and 9,500 new listings in March, which is less than 21 and 22, definitely more than 23. Check out 23. I sort of connected all the dots to see what the new listings coming to market last year looked like. And it was like kind of flat. It was like in the 7,000s for the most part. You didn't have that growth through the spring and summer like you
The
do with some of the other
sellers were
years.
scared because interest rates were up. They didn't know what to buy. There was a bunch of it was new to the change, and everybody was a little scared,
Yeah,
gonna try.
people are moving because they needed to, not because they wanted to, in 2020 through 2022, people were moving. They're like,
Right,
as well.
right.
Let's look at our under contract and demand. So your toilet paper in the cart. These people have decided, yes, I'm going to buy this house and it's now under contract. So it looks like it dipped down. We're the purple line on the bottom. We are shy of every year back all the way back to 2015. That's as far as this metric goes in Cronford report. It looks like we're taking a dive and we've got some trouble ahead, but that's seasonal. If you look up, you see a similar tick, a downward tick, and that's just one of the, you know, idiosyncrasies of this particular week throughout the year. I don't know what it is. This is more important. So this is your what's driving these contract numbers, right? What's making people move? And you have this cause and effect. As soon as you have a spike up of interest rates, well, look at that. Contract rates go down just that next week, just that next couple of weeks. And that happens over and over again. So I feel like if we have some sort of downward, tick, then all of a sudden we're gonna have a spike. That's really the biggest indicator. So watch those interest rates, see what the buyers are gonna do.
Yeah, it's interesting to look between the circles here as the interest rates leveled, like our under contract rates all steadily incline. The interest rates rate leveled and then we steadily incline and they leveled and then when they jump up we drop down. This is a cool graph to see.
So sold volume, these are closed units. They have left the building. They've swiped their credit card. These are gone. This is more important than a lot of these other metrics in a couple of ways. With your actives, you might have someone go on active and they don't really have huge intent to sell, right? Maybe they're just like, well, we'll put it at 750 and see what we can get. They eventually cancel or expire. With your under contracts, you might have gone under contract, but then it falls out and it goes back on market. These are units that actually closed, right? So if we're looking at the sales per month, look at April. We actually did better than last year as far as our closed numbers, which I thought was pretty interesting. That tells you that we're moving stuff. Stuff is hanging in. It's successfully closing. So a couple of quick observations from Cromford. Over the last 4 days, the monthly average price per square foot for closed listings for all areas and types anomalous has exceeded 308. So that's made a new all-time high record of 308 and a penny. I expect the usual seasonal decline in average price per square foot during the third quarter, but for now, the market deserves some respect for its resilience and sellers can celebrate the all-time new high. So, there are peaks and valleys, there are high times and low times, and some people sort of bought at the top of the market in 2022, and that's kind of what it was. And this is sort of the spring flower that's popping up saying, hey, we are now getting close to you breaking free of those chains. So, obviously it's really dependent on the specific area that you're in, but this is sort of the showing that we are coming out of the woods, I guess.
Yeah, I mean we're really for those that haven't been in the market long, if you haven't been watching the market for 10, 15, 20, 30 years, then you haven't seen what it looks like to come out of a trough. There have been troughs always in the 80s, at the late 90s, 2000s, 2008. There's always been these kind of a little bit market resets, but generally we always go up. And this is what it looks like. This is what act it's taking right now. We had these kind of market resets. We had 2020 and 2021 and went up. We definitely had a little trough and a kind of I'll call it a reset, not nearly as bad as the recession or anything like that, but it was a reset from what the exuberance was in 20 and 21.
Mhm.
And now we're seeing, the price per square foot's going up. We're seeing homes steadily get on the market a little bit more, and our contracts going up a little bit more. I mean, we're seeing some healthy signs. Definitely would like to see more. It is still your GIF in there. It's still kind of boring. This is not a let's go out and have a super fun time looking for houses or selling a house. But that also comes down to your little specific local area. These are overall numbers. Like And so we're looking at a very umbrella view of the entire market for the Phoenix area. Um, would definitely changes when you get down into zip codes, city zip code, even neighborhood level.
Yep.
Some are definitely acting contrary to the market. Uh,
And that's where, that's where your skills come in, because
yeah.
if somebody is looking and if the public is seeing this general information and say, well, things are going great down in Chandler, like, well, you're in Buckeye. So, I
Right,
think
right.
we need to look at some Buckeye numbers and investigate for you, to find out, what it takes to compete, what it takes to sell,
Yeah.
or with buyers, what sort of competition are you up for? How can you prepare yourself? Because if someone's in Buckeye and they say, well, things are sitting, I want to move to Chandler, and be like, well, Chandler's a different story, buddy. It's got different behaviors and different stats, and we're going to need to tune the strategy to that.
Yeah, even it's funny you say that. Even moving across the city can be as confusing to buyers and sellers as moving across the country.
Yeah.
You move from one market to a completely different market.
Yep.
Yeah.
So as always, follow our Facebook page, get some updates. You can feel free to email me for the slides. I'll be happy to share, and we'll keep an eye on the rest of this stuff as we go. We'll see you guys next month.
Yeah, awesome.